Okay, there we go. It looks like video is finally working. Yeah, actually, there's a lot to talk about today, and not just about the stock market today. There's been an announcement by the U.S. government that no joke, if what they say is true, it is likely to change the world. Okay, and it is in regards to something that I covered a few months ago too. So a few months ago, I actually talked about fusion energy and some of the work that was being done on that. And I was pretty skeptical about what's been going on, largely because I've literally been paying attention to fusion research since I was 8 years old. And I'm not kidding. I remember reading some articles in like Ranger Rick magazine or something like that, one of those like children's scientific things about fusion energy, and getting really excited about it. And then every time there was a tantalizing new piece of news that came out about fusion energy, I got really excited, until eventually that excitement started wearing off because there didn't seem to be a lot of progress until last year. And I don't remember which live stream it was, but I talked for about 2 hours about fusion and about the deuterium, tritium fusion techniques that are being used, and how material science to a degree had kind of been bypassed with this technique with electromagnetism and lasers that they were using to isolate the. Anyway, I was still relatively skeptical, but it looks like scientists have finally created a sustainable fusion reaction that returned a net positive amount of energy, meaning they returned about 120% of the energy used to create the fusion reaction, which is seriously impressive. And it lasted for about 5 seconds. I know that doesn't sound like a lot, but in terms of the proving ground, as far as whether or not we can create a sustainable and controllable fusion reaction, that is it. That is it. And it is now possible. So monetizing this, making it commercially available, making it so it can power grids, is probably a long way away, years, if not decades away. But this is literally the light at the end of the tunnel in terms of our carbon economy, the end of the energy wars as we know them. Although I'm going to point out how that could start a whole new round of energy wars, not kidding, being fought on the moon over energy resources. But I would suggest that long before this technique becomes commercially viable, something's going to be worked out. Yes, Bram makes the point that controlled nuclear fusion, the uncontrolled type, has been around since the 1950s. That's true. With the hydrogen bomb, uncontrolled fusion has been around since the 1950s. I can always count on you to make those really contextual, scientific and historical points that are kind of funny, Bram. But yes, this is big news, guys. And a lot of this is what I covered in that live stream a few months ago with this company, talking about the inertial confinement of fusion rather than relying on materials. Rather than, when I say relying on material science, rather than creating an object that can control something, that's 1,000 times, 10,000 times hotter than the sun, they're using lasers, plasma, and electromagnetism to do it. But this is a deuterium tritium reaction, and tritium is the issue, folks. When I talk about a new round of energy wars, tritium is extremely limited here on Earth. It is not limited on the surface of the moon. And if you think that our recent moon mission, or the recent desire to return to the moon, has come in a vacuum or out of nowhere, I would say that you are mistaken. Okay. And so we've known for a long time, at least since 2006 or so, when this article and a number of articles were published talking about the lunar helium-3 fusion resource distribution. We've known for a while that the moon and Mars could have a lot of these, and that could be our source of essentially free energy. It does offer the potential of conflict, but like I said, this will probably not go the same way that struggles over oil energy have gone. And this was the most recent moon mission, the Artemis 1, which splashed down safely in, I think, was it the Pacific or somewhere like that? But anyway, this is just retesting sort of the ideas we have getting humans back to the moon. And that was not done in isolation, folks. I want to say that to a degree, this was done, in preparation for a moment like this. And so scientists have reached a breakthrough in a long-awaited fusion breakthrough, sources say. So for the first time ever, U.S. scientists at the National Ignition Facility in Lawrence Livermore National Laboratory in California successfully produced a nuclear fusion reaction, resulting in a net energy gain. A source familiar with the project confirmed to CNN. The U.S. Department of Energy is expecting to officially announce a breakthrough on Tuesday. And these are just rumors at this point, like I said, so I'm going to wait for more judgment, I guess, on Tuesday when we hear this. The result of the experiment would be a massive step in a decades-long quest to unleash an infinite source of clean energy that could help end the dependence on fossil fuels. Researchers for decades have attempted to recreate nuclear fusion, replicating the fusion that powers the sun. So we've known it's possible, at least since the 1950s when we created the first hydrogen bombs. To create this kind of energy, controlling it has been a different story. So nuclear fusion, of course, happens when two or more atoms are fused together to create a larger one. In this case, it's a stable isotope of helium and a non-stable isotope of helium, a radioactive H3 isotope. So unlike nuclear fission that powers electricity all over the world, it doesn't generate long-lived radioactive waste. So it's very short-lived radioactive waste that is containable, meaning it doesn't create a lot of gamma rays or anything like that. So scientists across the globe have been inching towards a breakthrough using different methods to try and achieve the same goal. And the National Ignition Facility project creates energy from nuclear fusion by what's known as thermonuclear inertial fusion. In practice, what scientists do is they fire pellets that contain a hydrogen fuel into an array of nearly 200 lasers, essentially creating a series of extremely fast and repeated explosions at a rate of about 50 times per second. The energy collected from the neutrons and alpha particles is extracted as heat, and that heat holds the key to producing energy. So this is exactly what I covered like 7-8 months ago on a live stream. I don't even know which live stream it was anymore, but I covered it with like a bunch of illustrations and graphs and all that stuff. So also, fusion via solar panels has come a long way. That's a lot of the things that people don't consider is solar energy is actually nuclear energy just at a really long distance. So, and because if you think about it, we live 8 light minutes away from the largest fusion reactor in our neighborhood. And we use that fusion reactor to do all kinds of things, including, it's the foundation of life and all that, but also solar energy as well. So another good point, Bram, that I wanted to cover. So this is kind of out there in terms of its subject matter for my channel. It's something that I'm interested in. I realize not everyone is interested in. If you have further questions on this, there are probably a lot of them that I can't answer. All right. Although this type of chemistry and physics is actually not as hard to understand as you might think. The material science, the optical science, and all that stuff is pretty hard to understand. But nuclear fusion in itself is not really that difficult to understand. So, but like I said, the material science and optical science that goes into it. When I say optical science, I'm talking about the lasers and things like that. That is way beyond what I understand, and so I'm really relying on everyone else for this. But did want to talk a little bit about the economy today. I hope you guys caught my video on entitled "No One Wants to Work Anymore," and let's talk about that a little bit here about whether or not the Federal Reserve is putting us on a path for a hard landing or sort of a Goldilocks recession where it's just enough to create or to kill about 1 to 1.7 million jobs, to bring down demand and tame inflation, and to bring a little bit of balance into the labor market. I didn't make that clear in the video, but I think that's actually kind of a tough row to hoe. And I think that's going to be difficult to do. I think that the recession will probably be relatively shallow next year, but it's likely going to be a recession. I'm far less alarmed than most people are when it comes to the layoffs in the tech industry. And let me tell you why. Not only was a programmer back in the day, software developer back in the day, but I managed like teams of software developers. And I remember having this conversation with my boss at the time, telling him that at any time that I had worked for this company, I could cut up to 20% of my workforce and it would have zero impact on productivity. And it's largely because of two factors. Number one, a lot of software developers really just aren't very good. And when I say a lot, it's probably 90% of them. So the good ones are maybe 10%. The exceptional ones are maybe 1%. There's maybe 50% mediocre and the rest are just terrible, right? But the other thing is a lot of good programmers and software developers, get burnt out on projects they're working on because a lot of them are just not very satisfying to work on, right? You're not doing anything that's seriously impactful. You're not doing anything that's even visible a lot of times to the people that you're working with. It's a lot about schlepping data around from place to place and making sure it gets read into systems properly. And people get burned out and they become less productive. And it doesn't mean they won't actually be more productive on another project or another company. And you tend to see a high degree of turnover in software companies anyway, and the Silicon Valley companies anyway, when you are looking at companies that have stock offerings and their stock is doing really well, or you're looking at a large amount of people that have been burnt out by working conditions, and that can be because they're treated poorly, and it can just because they're bored with the project as well. Like I found it necessary to change jobs every year and a half to 2 years when I was in that industry, just because I got bored with where I was working. And I think I did get let go during the initial .com crash I was one of the late ones that got let go in like 2001 or something. So it was relatively easy for me to find another job after that. But I got let go at that point because the team that I was managing had started to perform rather poorly. A lot of it was my fault. I was totally burnt out on the job where I was, moved on to another company, and then continued to perform really well after that. But that conversation has stuck with me for years, and I still believe that it's true. At least in the software development world, I could cut my labor force by 20% at any time and have zero impact on productivity. I think that's probably always been understood. And this period that we're going through right now is probably seen as an opportunity to realign the labor force within a lot of companies. But back to the sort of subject that I covered in the video that I made today about no one wanting to work anymore. Number one, I don't believe that's true, and largely because that's feeling that no one wants to work anymore has always been true. There's this guy named Paul Ferry on Twitter, and I think he's a professor somewhere up north, like Stanford or something. And he did a Twitter thread called "A Brief History of No One Wanting to Work Anymore." And I'm not going to go through all of these articles. We're just going to look at the dates. So 2022, 2014, 2006. I can't believe the bad luck I've had in trying to find someone to do some needed home improvements. It seems like no one wants to work anymore. And when they do, they take no pride in what they do. How does one find a dependable worker? 1999, they want a computer to make all of the decisions. 1981, I hired 2 boys to clear land last week, but they just didn't want to work. No one wants to work anymore. 1979, I'm not going to go and read that, but 1969, the first of the programs dealt with how it feels to be poor and the upcoming Sunday Agreement. No one wants to work anymore. So people were saying it back in 1969, back in 1952, back in 1940, back in 1937. Orchardists complain of a shortage of labor. And let me remind you that this was in the middle of the Great Depression, when we had 25% unemployment and people were actually starving in America. So why could they not find labor in that time period? Faced with a shortage of labor when unemployment is widespread, peach orchardists in York and Adams counties are complaining that no one wants to work anymore. There is work, it is reported, for 15 to 25 peach pickers in every orchard in the 2 counties, but only 2 of the 5 pickers are at work because of the unavailability of labor. Just like today, those people, if they were able to find work, were able to find work at better prices for their labor. Picking is always like, I don't know if you guys have ever worked at a farm before, but it's a lot of hard work. So what is the cause of unemployment and hard times? The manufacturer and businessmen say is because nobody wants to work anymore unless it can be paid enough wages to work half the time and loaf half the time. This is 1922. 1916, 1905, 1894. So everyone following this account from this thread mostly expects silly jokes about politics, but something is stressing me out because that's my coping mechanism. Old newspaper clippings, and we finish off the year with a headline of the year contest. All right, so that's not related to this, but anyway, so the actual history and publication of the whole idea that no one wants to work anymore is pretty old. Okay, yeah. Let me see here. So copper has started to gradually turn up from the July lows. So at this point, does this point to stage a milder recession? So yeah, the other thing I wanted to say is that don't look at tech layoffs as news of us entering into a recession or having an employment crisis. I would be looking more to the construction industry, layoffs in the construction industry. Those haven't even started yet, although I do know at least 2 companies that have had a hiring freeze. When I've tried to help people get jobs there, I've been informed that there's a hiring freeze, but we haven't seen massive layoffs in the construction industry at this point. There have been previous periods where there are widespread tech layoffs, and there is no recession. So the point that an article that I was looking, or the speech that the Fed made on November 30th that I used in the video that I made earlier, was 2 points there: that excess retirement and net immigration decline is probably one of the biggest causes of the labor issues we're having today and wage inflation. There aren't enough people of working age, say 16 to 60, to fill the jobs that we have. Those people are largely fully employed, right? And the hole that we have right now in labor force participation is mostly explained by the decline in net immigration, and this is what the Fed says, and excess retirement. So this is kind of an illustration of the decline in net immigration. It has declined every year since 2016. And if we look at, that's kind of what I wanted to show there. And if we look at the increase in net retirement beginning in 2019, is actually when we saw the spike up in retirement. So we're looking at baby boomer trends by age, people by age reaching retirement age. But we're actually looking at more, or people younger than retire age are retiring, and it's spiking it faster than we anticipated. So the labor force simply isn't growing fast enough because boomers are retiring earlier than expected. Probably their accounts are buoyed by really good returns in 2020, increases in of course their real estate portfolios and that sort of thing. So I once heard that nuclear energy was most expensive and also one of the few energy solutions that was getting more expensive over time. Well, considering that no one had ever produced not just a commercially viable nuclear, that would have been like a fission reactor. So a fusion reactor is a net positive solution, meaning that if you fire 10,000 kilojoules of energy at a deuterium tritium pellet, it's going to produce 120% of the energy that you put into that, which you're able to sell, right? That calculation would be, the reaction in that case would be self-sustaining because you have excess heat to power that reaction, and you'd have excess heat in order to sell to a utility grid or something like that. They're really talking about nuclear fission, which nuclear fission is a completely different process. And a lot of the cost in nuclear fission has to do with containing and getting rid of the nuclear waste, which with this fusion reaction, you don't have that issue. Your waste product is, actually, I forget what the waste product for that is, but it's not a waste product that's toxic or hard to deal with or anything like that. So nuclear energy, how it was described in the past, really, you probably shouldn't take a look at what that means for nuclear fusion going forward. That's going to be a whole new set of data and calculations. So did want to take a look at this. Linus KK says, hello, Jason. I'm not really, or it might not be up your alley, but any thoughts on VFC, a clothing company currently priced at a 10-year low, high dividend? I'm thinking about buying more for diversification. So I actually don't know anything about this company, but at least it may be a company I'm familiar with. I'm just not familiar with the symbol. But I did want to address something. Just because it's not up my alley, it doesn't mean that it shouldn't be in your portfolio. Okay. So we have a bias, something called familiarity bias. This is one of the reasons why I own most of my portfolio in ETFs, is because I have a familiarity bias when it comes to buying individual stocks. I buy mostly technology stocks, and I own a bunch of oil stocks from when I worked in the oil industry. And I own a bunch of banking stocks because these are the industries that I've worked in: energy, banking, technology, right? That's where all of my investments lie. That's a huge mistake when it comes to diversification. This is the reason why the vast majority of my wealth is actually in ETFs that are diversified across industry type, across company size, across geographies and all that stuff. So just because it's up my alley doesn't mean it's not a great stock. And maybe we can take a look at that stock at some point. And let's remember that my internet connection is always super slow. So it's going to take a moment. But I'm happy to take questions about individual stocks. And like I said before, many times, that is not an endorsement to buy, sell, or hold any security. And I may not know very much about the industry that we're talking about. So, you see here, but I did want to take a look at quickly just how high that dividend is. In this of interest rates, super high and declining stock prices, super high dividends are not necessarily a good sign. And in this case, for a clothing manufacturer to have a dividend of 7.23%, they are pretty close. They're at right above their 52-week range. We're looking at here. So really declined since the peak here of 2021. Looking at a max decline here. Let me see here. All right. So the dividend yield, I probably wouldn't get too excited at this point. 7.23%. I don't know what the payout ratio is on that, but I would be surprised if that's going to be able to be sustained over time. I would take a deeper look at this company before I decided to commit anything to them. So earnings per share is a dollar per share. Price is 26.06, which for the clothing industry is probably not out of line, but the dividend would be way out of line for the clothing industry. So way out of line. Let me see here. I don't know for this company here. So it does have fairly decent set of recommendations here. Strong buy to buy, a number of holds, and very few underperforms and no sells. Let me see here. So missed earnings just barely in the last two out of the last 3 quarters, and met earnings in the last quarter. Let me see here. Yeah, I would do that. I want such precipitous lines from the top, especially when, their revenue is relatively consistent, right? It's between 9 billion and 11 billion, and 2022 actually looks pretty good so far, and the earnings look pretty good so far. So why is the stock down so much? Maybe it's profit warnings and that sort of thing, but yeah, look at quarterly here. Well, that's the reason why. Declining earnings for 3 quarters in a row. And they do their fiscal quarters a little bit differently, depends on the filing date. And it looks like their earnings have declined in the last 3 quarters. Sorry about that, guys. I always sneeze in the middle of my live streams for no apparent reason. Labor force has seen what is possible and no longer settle for crap jobs. So yeah, I think that's true to a degree, but it's always been true. It's the lowest skilled workers take the jobs they can get when times are bad. And right now times have been pretty good, and labor has been able to demand better treatment from employers. And I really think that when I hear the phrase "nobody wants to work anymore," especially from someone who is an employee of a company, to a degree, I always kind of feel sorry for them, right? They don't really understand the dynamic between, the employer, the guy who runs a small business, or the guy who runs a large corporation, or the board that runs it, and the fact that just employer. You're not a capitalist. You need to fight for what you're worth in the marketplace, right? You need to be prepared to leave your job and go somewhere else for better pay and working conditions. That's what keeps the labor market healthy. It's a little unbalanced now, right? With changes in demographics. So can you explain being below $1 is a big problem for Arrival on the NASDAQ, but below is not a big problem for Moneyline? No, being below $1 is a big problem for Moneyline on the New York Stock Exchange. It is a big problem. The regulation is almost exactly the same. So basically, Moneyline has 60 days to remedy the fact that they're below $1. The bare minimum that they would probably do is a 10-to-1 reverse split to remedy that if the stock doesn't rise above. They have 6 months from November 30th when they receive that notice to remedy their stock price, and Arrival and would have to do the same thing. So, and it's a big problem for Moneyline too, because their market cap is really small, and that would limit severely the number of shares outstanding. I think their market cap is only like 340 million. So this has always been kind of a big risk for me, almost gambling. Fortunately for me, it didn't cost very much money. Arrival, though, a lot of people have bought into Arrival at a much, much higher price point. I really liked their idea on how they were going to manufacture things. I think that had they gone public maybe a year and a half earlier, they would have had the time to raise enough money through secondary offerings to weather the storm here. Tesla is one of the companies in terms of a war chest that is probably in better condition than almost any of the other EVs out there, just because they literally have like $25 billion sitting in a bank. And that's always been sort of a rainy day fund. And Canoe, Arrival, and a couple of other companies, they have no rainy day funds. In fact, Canoe's philosophy is let's not have a rainy day fund because, it keeps us under pressure and working and all that stuff. But no, it's still a big problem. And if they don't remedy that situation, they will be delisted, and they probably go onto the pink sheets at that point. And even in the event of a reverse stock split, the stock would probably still decline another 20 to 25% before it recovers at all. And that is just how things are done. One of the famous companies that did a reverse stock split and then did fairly well for a little while was Nano Dimension. Before they went crazy, and it was only like 8-10 months before they went crazy, they actually did like a 20-to-1 reverse stock split, and they were a couple dollars a share. And then they became a meme stock on Reddit, and they got bid up to like, $13-14 a share or something ridiculous like that. And I ended up buying like 100 shares, very little that I invested in that, and ended up selling it off for a nice profit. But that was not something that I normally did. And largely I did it just to make sure that I'd go back and research it at some point. And then when I finally did my research on the company, finally did my research on their competitors, I realized that they already had a lot of competitors in the space. Their patents were no protection whatsoever for what they were doing. And the fact that they didn't really have a clear advantage over any of the competitors in a 3D printer, right? And even one that did printed circuit boards. So yeah, but they really used, this is the one good thing they did, they effectively used reverse split and then sort of re-engineering their entry back into public markets to go back and hit up, private markets and do a ton of dilution and raise money to keep going. They were very much in danger. Nano Dimension was very much in danger of going out of business, but this allowed them to go back and hit up capital markets. It's going to be tough for Arrival to do that. It's going to be tough for Moneyline to do that. And because things have changed when it comes to the cost of capital, like in the case of Moneyline, if your entire market cap of the company is worth like 250 or 350 million or something like that, that puts a really low cap on what you can go out and borrow, right? And then if you offer a secondary offering on that, that's also a pretty low cap on what you can offer because your market cap is already so low. So doing these reverse mergers in this reverse stock splits in this type of environment, I actually think that it might lower your chances of being successful in the future. In the case of Moneyline, I don't see them having that much of an issue to get back over $1 per share. They are really close to EBITDA break even and not that far away from at least profitability on paper. Right. But they also have to, and they're still expanding. Arrival, on the other hand, their production is probably too low, and interest in their product is probably too low. Although we are seeing, Elon talking about Lucid maybe not lasting much longer. There's a lot they said recently that I just want to forget, but that's not one of those things that you should just forget. Lucid may be in serious trouble. A lot of it has to do with their entry point into the market. A lot of that has to do with the availability of, a lot of it has to do with capability you don't necessarily need in a family car. And the Lucid vehicle, while it performs like a sports car, it looks like a family car. And in terms of looks, it's not all that unique. but in terms of its capability, really not. Does it do a lot to range anxiety? It does. But let's remember, almost everyone buying an EV now lives in a home and is going to be able to charge it at home. So range anxiety, once you get that EV is probably less of a concern than you might think. But they are in trouble for a number of reasons. Their cash burn is very high. Their production is very low. And borrowing money is going to be very difficult. And the era of doing zero coupon convertible bonds like Tesla did is over. Now you got to pay interest on those things, right? Tesla was able to issue, $1.1 billion, $900 million of convertible bonds at 0% interest. They were just convertible at a certain price to a predetermined price and a predetermined number of shares. And that's one of the ways they were able to fund their expansion. And they could do that because of the low interest rate environment. That is done now, and it's done for the foreseeable future. And the cost of capital is going to kill some of these EV companies that really have a good shot. And I think Rivian has a pretty good shot, and I think it's a great product. But I'm starting to worry even about their ability to survive in the long term without some sort of intervention from private equity. And look, the intervention from private equity is not going to be charity. Right? It has to be based on what the company's worth today and what their future cash flows are worth. And somebody's got to be able to see or figure out whether or not they can actually make a profit, right? And that's kind of my worry when it comes to a lot of these EV companies. So let's look at this was published on Friday, December 2nd, right? And we're talking about the Fed's path to a Goldilocks economy just got a little more complicated. So I'm going to say that by the time the Federal Reserve rolls out with their meeting on later on this week, the 13th and 14th, we're going to see another 50 basis point interest rate rise. And I'm betting on that. If the market sees 75 basis points, it's going to be disappointed, and we're going to see a pretty bad day in the market, pretty bad rest of the week. If the market sees 50 basis points, there's going to be an irrationally positive reaction to this, just like there was when they were discussing taking their foot off the gas in terms of raising interest rates. We're going to see sort of irrational exuberance, market up 1,000 points or something like that when that happens on Thursday, right? It's irrational because interest rates are still rising. Monetary policy is still tightening. It's just not tightening as fast as it was before. But this is going to be drawn out. The Federal Reserve has made a lot of comments recently regarding tools they have to increase labor participation or to increase the availability of labor. And the reality is they have zero tools to increase the availability of labor, meaning they don't control immigration policy and they can't let people into this country to work. They can't force people to reproduce, and put more people in the workforce. All they can do is decrease the money supply with a variety of tools that they. Hold on a second. Key thanks. Didn't the Fed already announce that they will do no, I think that meeting's on Wednesday and Thursday of this week. So there was a meeting, not a meeting, but speeches that were done at some institute somewhere last week or 2 weeks ago, where one of the people on the Federal Reserve Board was saying that they support a smaller rise in interest rates, right? That's always going to be voted on by the board. Jerome Powell doesn't control that. He's just one of the people that votes. But they suggest, and look, that's deliberate. They're laying the groundwork. The Fed doesn't outright lie to you. The Fed basically lays the groundwork for what they're doing pretty far in advance. And it's called reading the tea leaves, reading the Fed tea leaves in the industry. And people do that all the time. They look over the minutes of a meeting or what is said. And it is believed, I don't know if it's true or not, I think it is true, that almost every word spoken in a public meeting is carefully chosen to lay the groundwork for what is coming next. And I think that probably the Fed has done more to signal this time around the exact number that we're having for an interest rate increase. And that number that they've been signaling is 50 basis points. But they will announce this, and they don't announce it ahead of time. Because they don't want to positively or negatively affect fixed income markets. So yeah, Let me see here. So higher expected payroll numbers and wage readings added to the delicate tightrope the Fed has to walk in order to execute that Goldilocks landing. The numbers would indicate that a 3.75 percentage points worth rate increases so far have had little impact on labor market conditions. So this article was from December 2nd, which is a few days after that November 30th speech, and it's kind of in direct opposition to what Jerome Powell was saying. He was saying in that speech that we're seeing an effect. It's a real effect. It's a small effect now, but it's definitely a real effect. The inflation outlook, while uncertain at best, has a path forward that is consistent with a Goldilocks scenario. And this is what a Moody economist, Mark Zenny, said. The Goldilocks scenario would be one that's just right, meaning that we have a slowdown in the economy, we have a decrease in demand, we have a decrease in pricing power, labor's pricing power, meaning they're no longer in control of the price of their own labor. So yeah. Anyway, that's kind of the big news that's out there today. I'm definitely willing to, because I've had to cut the last couple of my broadcasts short because my voice kept giving out, and it's because I was sick. But I'm definitely willing to talk about anything you guys want to talk about today. I'm going to get some of this stuff off of my screen so it runs a little bit more quickly. But if you have questions about individual stocks, I'd be happy to answer that. Anybody take a look at Tesla stock today? Tesla stock was down. Well, it was down the last time I looked at it by about 4 or 5%. I don't know how it ended up for the day, but I imagine it probably ended up 4 or 5%. And there wasn't a business for it. There wasn't even a good reason for it. It's because probably appeared at a comedy club with Dave Chappelle, and basically he got booed off stage. And then he made a series of ridiculous comments on Twitter that really shouldn't be taken all that seriously. But he basically said that that he went to a comedy show, got booed by 10% of the audience, and it must be because he pissed off a bunch of liberals. Like I'm sure that is the audience that goes to a transphobic Dave Chappelle show. Now, I actually don't know anything about Dave Chappelle kind of in the modern context. The last time I watched him was like 20 years ago, and he was great. I just don't go to comedy shows that much anymore, except the ones at my own club. But I didn't see the controversial one, the controversial special that he did or anything like that, and I have no comment on it. But my thing is the person who put that video on Twitter had their account deleted. So free speech out the window, guys, right? So free speech out the window. So it ended up being mirrored on YouTube and a couple of other sites as well, but it was deleted off of Twitter. The user who posted it had their account banned. So what does that tell you about the commitment to free speech? I don't know. I'll let you make your own decisions on that. But it's gotten to the point now where I'm so concerned. I mean, I hold a lot of Tesla stock, and at least for me, it's a lot of stock, and it's a large portion of my overall net worth. And at this point, it is Elon Musk's personal behavior that is driving down the value of the stock, just like it was his personal behavior, his guidance and his vision that really pumped up the value of Tesla stock far beyond its actual income and revenue multiples, right? But he's building a case right now for a bunch of shareholders that want to sue him over his behavior, which is going to cause more issues that pile onto Tesla. He is building that case for them, and it's something that I wish he would stop. Twitter would be better off if he did not tweet. Tesla would be better off if he did not tweet. And now that we look at this wider world of space exploration and potential mining for tritium on the moon, and what that says about the national security elements involved in NASA, SpaceX, and maybe Blue Horizon making multiple trips to the moon, mining and that sort of thing. And let's remember the moon is an international asset and all that stuff. No one country can claim it or anything. But it may be that his behavior causes SpaceX to miss out on a number of government contracts. And it may be that Blue Horizon or another private company ends up owning a lot of those contracts going forward because he's seen as a security risk. So, yeah. If Elon is busy with Twitter, Tesla might do better. There was already a regulatory filing that they are bringing radar back You mean LiDAR back, right? So at the the Brookings Institute. I think that's what you mean. Yeah. I don't know. Let me see here. The speech that I was looking at was from at the Hutchins Center on Fiscal and Monetary Policy. Oh yeah, Brookings Institute, Washington D.C. That's the one I was directly quoting. So yeah, that is the one that I was directly quoting, and it was from this speech right here. And I did a video on this earlier, so but I kind of didn't go into all my thoughts on the video. It was already 13 minutes long, so yeah. So Mark Millis, $60,000 for a car that doesn't warn you that you're back about the back end of something because someone decided cameras are the answer. Um, yeah. So I kind of understand why why someone might believe that cameras are the answer. Because that's all we have as human beings is binocular vision in order to judge distance, right? And so they're thinking, oh, you put a couple cameras on the back of the car, you should be able to do that too. But why not use all of the available tools that we have, like LiDAR and radar, right? To gather as much data as you can in order to make decisions. Like people look at our senses, right? As the things that we see, touch, feel, and hear, like that's an accurate reflection of reality. And it's actually not. It's a user interface for reality. We only see, hear, touch, taste, everything we need in order to survive long enough to make copies of our own genes. That's it. It's not a perfect reflection of what reality is. Like I've not always been on the side of LiDAR or radar inclusion in vehicles until I really started thinking more about why were they so focused simply on vision. And I think it's because they really want to be able to replicate what they see as like the human capabilities. Why not go superhuman, man? Why not have radar? Why not have LiDAR? And oh wow, they reckon that the LiDAR or the radar only costs $144 on there, and I think that's pretty amazing that they've applied to redo that only costs $144, and it gives you an additional data layer to make decisions as well. So I think that and this happens in any sort of scientific endeavor sometimes, that people get stuck in their own feedback loop when it comes to what they desire for the outcome of a product or experiment, and not sort of what actually gets you to the best user experience product or experiment. And I think that's kind of the case here. Is they finally just said, hey, we're not there in terms of in terms of data imaging and drawing conclusions from it. Why not use that extra layer of data? I think that's a great idea. But hey, what do I know? I'm just some dude on the internet making random comments. And yeah, I would like to know more about this. This is something that maybe we should discuss in our Patreon group. Probably going to do like a Patreon only meeting again here pretty soon, so we can kind of discuss these things. But I'm going to say this kind of publicly and on air. Like, I'm very concerned with Elon Musk's behavior and how it affects the value of the stock that I already have. For me, it's a lot of money, and I'm kind of pissed off. So uh, I think that I would prefer to back Robert Scaringe over Elon Musk, but not sure if he can make Rivian a success. Yeah, well, I mean, I'm not sure anyone can make Rivian a success based on current market conditions. It doesn't matter how great of a product you have. It may be the wrong time to put it out there, and that's one of the things that Kathy Wood has always talked about when it comes to early parts of a technological revolution. There's always great ideas and great products, and a lot of them just aren't great enough to spur that disruptive innovation. And Elon Musk kind of really hit things at the right time when it came to the decline in lithium ion batteries, the costs, and how that made electric cars possible for the first time. How he took the right demographic to attack, the right demographic to sell to, and the right way to market it to a degree. Rivian doesn't have any of those abilities to do that. Now they're doing something very different. They're going after that small truck market. I honestly think that everyone was, because it's a little bit more open, because the Toyota Tacoma and that smaller truck has probably been the best seller for the longest period of time, followed by the Ford Ranger and a couple of other models out there. But there's more room in that for success. When it came to like the full size truck market, like the Ford F-150, there just isn't a way to compete with a Ford F-150 in a full-size truck until you have something different or something that's really bulletproof in terms of its abilities. Yeah. Uh, yeah, this is live, but your comments may take a while to get to me because I use some third-party software so I can display your comments up on the screen here. But yes, it is live, so fire away with any questions that you might have. It just may take a few minutes for me to get there. But no, I had the opportunity. One of my neighbors actually has a Rivian. I didn't ask how much he paid for it, but I know it's got to be a lot. So I do live in a neighborhood where most people bought their homes long before we saw this huge run up in prices. So they do have a lot of disposable income. And oh yeah, Keith, I'll get to that in just a moment. And so it's not all that new. It came out last year, but anyway. So I got a chance to like sit inside the Rivian, take a look at it, and drove around with him just in the passenger side, of course. But it's a great vehicle. What it can tow, I don't know. But some of the capabilities for like a work truck were actually really cool. And I think it's a product that's going to do really, really well. That probably word of mouth is going to be their biggest advertisement. And when people start using their truck and they have, and especially with contractors like plumbers and things like that, some of them that drive around on like small trucks, they start using this on a regular basis and using it as like a portable power supply too. I think that the reviews are going to be fairly good. So Jason, can you look at Lending Club? It's been trading a very low PE for a while. What do you think? So I've actually had an investment account in prosper.com for like I think like 14 years now, 13 or 14 years. And Lending Club doesn't allow you to like securitize or to do like the invest in the loans anymore. But I haven't taken a look at Lending Club in a while. Let me take a look at that. The Lending Club Corporation. And they kind of changed their model. Their business model used to look a lot like Prosper's, and now it looks significantly different. Per share, it does have a really low price to earnings ratio. And it's going to take us a few minutes to look at that. I think their declining price has really been about forward guidance, though. If we look at their earnings consensus over the last 4 quarters, they beat earnings consensus every quarter. 2020, of course, looked pretty bad. 2021, not too bad. They've never been a highly profitable company, even though they've been around for quite some time. But quarterly earnings have actually looked really good. And I think that it has to be, the big worry for them has to be about forward guidance, right? So refer back to the video that I had on pricing a company based on its current earnings. And you have to look at this company to decide whether or not the low price to earnings ratio is justified by future prospects of income. But I would say that this company is far more established than a lot of the other fintech companies that are out there. So yeah, far more established than other fintech companies that are out there. Their stock has really not done all that well since it peaked in October of 2021. And they not suffered, but they benefited a lot from the Cathie Wood effect, I think, in 2020. So yeah. Hold on a second. Jonathan Blackbeard says, you're not happy, but the reality is this is what you get when you choose to invest with Elon Musk companies. He comments and he gets media and criticized all the time, and he always has done this. So yeah, he always has done this, but he's starting to sound a little unhinged. And more than a little unhinged, especially when he started talking about gain of function research over the weekend via Twitter and started attacking Dr. Fauci on Twitter. He makes comments all the time that are mostly have been related to his businesses, but I got to admit that he's starting to sound a little unhinged at this point. So, yeah. Mark Butler says, I'm actually getting ultrasonics and radar confused. It's ultrasonics that stop before you reverse into things. They just got removed from the Model Y 2023. I added the references on the Discord. Okay. I'm going to take a look at that afterwards. And we're probably going to look up the difference between ultrasonics and radar, because I'm going to guess that they probably actually function similarly. But before I comment publicly on that and look stupid, I'm going to research it more. So, yep. Okay, guys. And Oog says, thanks, Jason. I'll check it out. Okay. So, yeah, it says, yeah, I'm actually concerned about how unhinged it is. Yeah, he's been dipping his feet into the conspiracy well. And so, not everyone who's on this live stream knows that I am not a big fan of conspiracy theories, uh, largely because I think that most people that believe in conspiracy theories really routinely have never had the opportunity to manage a large group of idiots. So because and I'm not saying that people, just even a large group of average people of average intelligence, it is very difficult to get all of them pointed in the same direction at one time. It's a lot like trying to herd cats, and a vast conspiracy that needs the participation of tens of thousands of members of our educated elite. It's not possible to do that. It just isn't. Somebody's going to talk. And somebody's going to break from it. Like most of the conspiracies that I have looked at that have turned out to be some element of truth, it's only been when a few people are involved, like 4 to 10 or something like that. So, but that is probably what concerns me the most. Is that I'm worried about Elon Musk falling down a sort of Howard Hughes type of rabbit hole. I'm really concerned about that. Yeah. Yes, and I hope it's all just a phase, and this will be a good opportunity to buy more Tesla stock. Although I'm not buying any more Tesla stock at this point, largely because it makes up more than 10% of my overall net worth, and nothing you own other than perhaps your primary home should ever make up more than 10% of your overall net worth if you can help it. So, yeah. Um, okay, so if you guys want to fire away with questions, I think I'm going to stay on for another 5 minutes or so, unless I get an overwhelming volume of questions. And then I'll just stay on until those stop flowing. But if you guys had a particular stock or something you wanted me to take a look at really quickly, some of the ones, like I said, Lending Club, I haven't looked at it in a while, but I am very familiar with their business model the way it is now. I did take a look at that for UG. And I hope that's how you pronounce your name, by the way. I just assume that because it's spelled the French way, that's how you pronounce it. So, the let me see here. You know what's funny is Lending Club used to have a ton of news articles that came out on it, and lately all I can see is their own press releases, which is also not necessarily a terrible sign. But yeah, but no, Lending Club's profitability over the last 4 quarters has not been terrible, and yeah. Do you think SoFi is falling for meaningful reasons? Not really at this point. So nothing about their fundamental business has changed in the last year and a half. It changed fundamentally in the last year and a half. They just keep growing and they're a growth story. Okay. The issue with them being investigated over crypto, the entirety of the amount of crypto that they have on deposits from all of their members is $124 million. That's what it was when I looked it up. $124 million. The volume of crypto trading they're doing is minuscule compared to their overall business and compared to everyone else that's out there. So even if they violated some agreement, they're just going to pay a fine and move on. And this is not such a big deal. And let's talk about why that is that every bank out there in existence right now is, if they're large enough, they're under SEC investigation for something. They're under a banking regulation investigation for something, or a securities regulation investigation for something. If they're found guilty, they'll pay a fine, establish that they've created corrective procedures, and move on. This is part of the enforcement mechanism of rules that are out there. And it happened with every single financial company I've ever worked for. We had to change something about our business because we either got sued by the public or sued by the SEC, and there was some regulatory violation and something had to happen. Like I worked back in the days when all of the rules changed on how you marketed, variable annuities, and then how you marketed annuities, period. And then how you couldn't sell an annuity inside of an IRA, which was always a bad idea. They just made it against regulations a few years ago without jumping through about 15,000 hoops. But all of those change at all times. You're always getting sued by somebody. Yeah. Let me see here. Any thoughts on China opening up for next quarter? I'm looking to buy calls. Okay. If you're going to buy calls on Chinese stocks, buy calls that are really, really long in duration. I don't know what's going to happen in the next year or so. I don't know what's going to happen with COVID. I don't know how much exposure they actually have to COVID, but I do know that if their COVID outbreaks look even half of what they were here in the United States, their medical system is going to be absolutely overrun, and there's going to be a lot of dead people, and it's going to cause disruption. If that doesn't happen, they've got far more exposure to COVID than we originally thought, and they've got far greater, herd immunity. Then it's not going to be so bad. But I think that mitigating the risk, like wherever you think that that the call is that you want to buy, if you were going to buy a call that's 90 days out or 120 days out, I'd go further. I think your chances of success are probably better if you're buying calls that are out there, which are really leaps that are like a year to a year and a half out there. And there are some really, and those deals are actually disappearing right now. I've been looking at volume and prices on calls on stocks that are out a year and a half, and they're starting to rise, right? And the cost of puts is actually starting to stabilize. It's not quite as expensive as it was before. So hedging has gotten a little bit less expensive, and buying calls way out there is a little bit more expensive. So, and a lot of that has to do with people anticipating China's economy to do well. A lot of it has to do with the Chinese consumer. The Chinese consumer has not driven a lot of China's economy in the past. And they're saying that there's a lot of pent up demand in China right now, and people are looking to buy things, especially now that faith in property as an investment has been shaken. A lot of the dollars that are still around, because Chinese people are better savers than Americans are. They have household savings that looks better on paper in comparison to their overall purchasing power than it does in the United States. And I know that's a weird statement, but that's kind of what the math says. That they were looking for a boom in consumer demand in China. So I think things could look good, but I don't think they're going to look good for about a year or a year and a half. And buying a call that is maybe slightly out of the money on a company like Alibaba that is not, a leap would be a deep in the money call. So you're buying a call that's not a leap, it's just over a year, that has a maturity over a year from now. And you're going to get long-term capital gains treatment on that as well, unless you sell it early. I think that would be a better bet, and it reduces your risk a lot, but you're going to pay a little bit more for that risk reduction. All right. Well, at the beginning of the pandemic, China built a hospital in Wuhan in 5 days. Was it a hospital or a containment facility? And they did it with tents. But yeah, I have 2025 put options on Lucid and Rivian though. So depending on where those puts are, you may actually end up doing fairly well on those, right? Remember, those contracts are still in force even if the company goes out of business. So you will get paid on those Lucid and Rivian contracts, right? So that might not be a terrible idea. You run the risk, though, of course, of those dropping in value precipitously if Lucid and Rivian manage to make it through the next 2 years. I think that's the real test. If Lucid and Rivian make it through the next 2 years, they'll probably make it. I think that one of the two is going to end up getting acquired at pennies on the dollar in the next 2 years. So Bram, $13.99 Canadian. Dang, I think I can buy more than one cup of coffee for that. Thank you so much, Bram. Thank you so much. And I don't do these to perform like a barking dog at the circus, but I do appreciate the super chats and all that when you guys push them through. I do enjoy those. Yeah. Options are the fastest way to lose money. So it is true that 80% of options are going to expire out of the money, right? So if you're a beginner at options, your best thing to try is selling covered calls. And you want to do it on a stock that has a little bit more volatility than the overall market, but not something as volatile as like a Tesla. I know I do sell options on Tesla, but they're so ridiculously out of the money, and the stock price on that is so high, and I could sell so many of them now because it's split so many times that I can sell something with a delta of like 0.15, right? That's only going to be in the money 15% of the time, and on average. And I can make $100 per option or something like that and create a good stream of income and use that to reinvest in other things. But doing it on a stock like Nvidia, where I'm trying to ideally use a ladder strategy to work my way up, right? using a delta of about 0.3, which means it has about a 30% chance of expiring in the money. Eventually, it's going to expire in the money. Eventually, that's going to execute, and that's fine. You work your way up using the ladder strategy there. But in the case of NVIDIA, it's too volatile and it failed. So you want to find something in between the volatility of an NVIDIA and Tesla and like Johnson and Johnson, right? Somewhere in between the volatility of Johnson and Johnson and NVIDIA is where you need to start your options journey. And you should start by experimenting with covered calls. Use a position that you don't have a ton of capital gains in if you don't like to pay taxes, but one that if it does happen to execute on there, you don't have to spend a ton of money, unwind the trade. I spent $8,000 once to unwind a Tesla option because I didn't want to pay a couple $100,000 in, pay taxes on a couple $100,000 of gain. So totally worth it for me, but it would have crushed some people to have to have done that. It didn't crush me to do that. So, but it took me a few months to make that back up in terms of selling options. And, all right, you, thank you so much too. Also, man, I have a lot of Canadians and British people sending me super chats. Thank you so much, guys. Yeah. So like I said, I don't necessarily do this for the money. I put more time in this than actually get back out of the channel. I do this because it's fun. And I like to talk about, finance, economics, and science on my channel. I don't really have a focus. If you guys want me to talk about something and I find it interesting, I will. Let me know if you guys want me to talk about anything in the comments below. So I'm going to go ahead and end this live stream. Thank you so much for all of your super chats today. I'm going to go ahead and end this live stream, though. In the comments, though, please leave comments about some of the companies, subjects, scientific subjects, or tech trends that you would like me to cover, and I would be happy to do so. I have more time than I've had in the last couple of months because I'm not working so much, at least now until March. I'm going to have a lot less in the way of work going on. So I will have more time to spend on this channel. Thank you so much, guys, and I will see you next time.